Welcome to Investors Insights. Our topic today is gas prices and student debt. How do you come up with that combination? Two interesting topics and a lot of information to go over, and we're going to address that. First of all, Trey, let's just talk about gas prices. We get asked when the economy's booming or slows down and people complain about prices at the gas pump. Talk about what's happening right now.
Yeah, so over the weekend, came out a lot of the waivers for the Iranian oil sanctions are going to come off. So oil prices are spiked up overnight and coming in this morning about 2.6%. Now that's not going to hit the pump right away, but we like to look down the road. To what may hit the pump. So as oil prices go up, gas prices are likely going to follow. So the U.S. is in an interesting spot because we are a net energy exporter now. And so the stock market likes to see oil prices go up because that helps energy companies, which is a large part of our stock market. But at a certain point, that will harm the consumer. As we did a specialty vlog about this, about how each penny increase in the price of gas hurts the U.S. consumer about $4 million per day. That adds up a lot over 365 days if we get a large increase. So the consumer is still very strong, but we're always watching for things that may bring them down. Right now, it doesn't appear that higher gas prices is going to hinder consumer spending. A lot of the data that we're seeing, they're buying more gas and more of everything else.
Very much so. And then actually tying in the student debt, talk about what states are now doing in this job market. With this economy,
Oh, it's unbelievable. I mean, if you go back to the 70s, a lot of student debt was forgiven on, let's say, a small town trying to recruit a doctor. So we've heard about that a long time. But what Greg's mentioning, he's right. Over the last 4 years, 20 states, nearly half, have gone in and basically said, if we've got an underserved industry, it doesn't have to be medical. It could be teaching and manufacturing, engineering, service, whatever it is.
Across the board.
Across the board. If we're a state and we're trying to get employment, we'll recruit you if you've got student debt, and we'll forgive it if you live here for a while. Utah's a great example of that. Basically, if I grew up here, had student debt, they recruited me in manufacturing out there. If it was underserved, every year that I lived there, they would forgive 25% of my student debt. That has happened with 20 states over the last 4 years. They have really jumped in there on this student debt stuff, and that's going to help consumers spending. And on a circle back, because a lot of this debt that you've got to absorb and service, now you can spend it in other ways.
Yeah, I think we've been talking for years about the millennial generation not buying houses, not being able to invest, not being able to spend because they have this huge weight of consumer.
It's been a national issue, and the states are actually the ones trying to solve the problem.
This is the new economic development move for a lot of states.
Some nice competition and a strong economy.
Sure. And Adam, tying back into consumer spending, just talk about the earnings news here.
Yeah, there's been a lot of speculation around the overall health of these companies. It's earnings week. It's going to be a big earnings week. Over 140 S&P companies are going to report earnings, including industrial and tech giants. So we're going to see a lot of good data come out this week. It's going to tie right back to the consumer. The consumer's out there spending money. Earnings are going up. So we're going to see the health of these companies coming out in the next week.
Well, and I also appreciate you talking about that data. As we all know, the five of us are data hogs. We love to look at all the different data. But that said, the UK, United Kingdom's done something that I'm having issues with that could flow over to here to the United States at some point. Bobby, talk about what they're doing in the UK.
Yeah, something new. So the UK government's coming up with an economic early warning system. What they're doing is they're gathering big data, leading economic indicators, and putting it into one new indicator. So here domestically, we have indicators or economic reports come out throughout the month. So we'll have an economic number come out at the beginning of the month. We have to wait until the end of the month to get confirmation on that one number. So what they're doing is they're coming up with a system that gives a quicker signal of economic change, and they're basically able to see the health of the UK economy in real time. So first economic reading came out from this new indicator last week, slightly negative. Why do we care about that? It's a global economy, and so you should care as an investor as well. So we'll see if that new economic indicator could come over here, and we could use it in our economy.
Well, the thing is, if they'd give us a breakdown, would make all the difference in the world.
Exactly.
I mean, that's the thing.
What are we looking
because,
at?
As those of you who've been watching our vlog know, we love to pull this data, to look at it, see what the impact is, and if we can have a breakdown, that's great.
It was positive to one person, maybe negative to another.
Absolutely, very much so. So with that said, we hope you have a great week. We appreciate you sharing this with others. Also during the tax season, appreciate some of our clients sending this vlog to their CPAs as they had conversations about economy, markets, and taxes. Please know that we appreciate that very much. We're going to keep you updated and look forward to doing our next vlog.